Que tiene más cámaras, y de recarga, para recarga y de bolsa.
Que no me lo decirlo. A ver, siempre lo que dice.
Sí,
con eso de mi edición.
eso no quita que quiero.
Lo estaba viendo y lo dije, como de sabemos que llegó una moto y Good morning.
How are you?
I'm the teacher.
Okay. I have a couple of slides left in this presentation. Okay, let's just review. So if you want to value equity using discounted cash flow method, which cash flows do you need to discount? If you want to value equity, which cash flows do you need to discount using this method?
Free cash flow equity.
Right, free cash flow to equity. And what discount ratio do you use? Cost of equity. If you want to value the firm, which cash flow can you use? As discount rate, you should use what?
Correct.
Okay? How do we get free cash flow to the firm? We have two ways, or more than two, but we will review two. So we have EBIT, earnings before taxes, this is the operating profit. After tax, plus the depreciation expense, so you add it back because it's not an expense, it's not a real expense. Minus CapEx, minus the change in working capital, minus the change in other assets. Okay, like obsolete assets or unused assets in the company. So this is an equation you use when you don't have an estimation of the free cash flow, because you don't know the interest expense. If you don't know the interest expense, then you estimate free cash flow to the firm using this equation. But if you do know the interest expense, then you use this one. They are absolute equivalent. Okay? If we use them correctly, they are absolutely equivalent. So you start with net income. You add back the non-cash charges like depreciation and amortization. Then you add back the interest after tax. So you see, interest after tax is equivalent to this interest after tax. So we have to be consistent. So interest after tax minus CapEx minus change in working capital minus change in other assets if they exist. Okay? Right? So if you know the exact amount of interest that the company has as an expense in your forecast, then you use this equation. If you only have operating income and for any reason you cannot estimate the exact amount of interest, then you start with EBIT. Okay? For your final project, I assume you have to use this one because you will forecast your cash flows. Okay? So we have to be consistent in the treatment of the taxes for interests. Okay? So this is the summary we provided. What shall we use? Real cash flows, or constant cash flows, or nominal cash flows? So it depends. If you are using as discount rate nominal rates, then you use nominal cash flows. If you are using real rates, then you use constant cash flows. We usually use nominal cash flows and nominal interest rates. Okay, but you may decide to do it differently. But we already proved it. It's exactly the same net present value, so the value of the firm won't change, won't be altered by that. If you are consistent in the treatment of inflation in your cash flows and discount rates, there is no difference in the value of the firm or the net present value of the project you are valuing. Okay? Now, important. Match the currency in which you estimate the risk-free rate to the currency of your cash flows. If you are working with US dollars for any reason, you cannot use CETE as the risk-free rate. If you are using pesos in your cash flows, you cannot use the treasury bill as the risk-free rate. Is that clear? So you have to be consistent all the time, all the time. Okay? Now, we're going to value a firm. You want to value a company. What do? We value the whole firm. We deduct the net debt. What is net debt? Total debt minus cash. The difference equals the value of equity of the firm. You divide the value of equity of the firm by the number of outstanding shares of the company, and then you arrive to the target price of the share of your company. So you're going to value a firm, a public firm, and you're going to provide a target price for its share for the next 12 months. Okay? So in the form of a table. You value the operating assets using the discounted cash flow method. What is this? EBIT. Okay? Plus any cash or marketable assets. Plus the value of any cross holdings. So that is a stock owned by the company in another company. Plus the value of any other asset. That's what you do using the discounted cash flow method. So you arrive to the value of the firm minus the value of debt minus cash, that is net debt, okay, equals the value of equity. If the company has options, we'll review later in the semester, then you have to deduct them because they won't represent value for the company, they represent value for the holders of the options. Then you arrive to the value of the common stock divided by the number of outstanding shares. That is your target price for each share. Okay, this is called fundamental analysis. Fundamental analysis is based on the discounted cash flow method. Fundamental analysis calculates something that is called intrinsic value. So what you get here is something called intrinsic value. So that is the value of one share based on the fundamental financials of the company, which are basically earnings. There are other methods that don't care about earnings. They only care about trends. That's called technical analysis. Usually use fundamental analysis to forecast the price and technical analysis for the timing of the purchase or sale of the company or the share. Okay, is it clear? Questions?
Can you repeat that? Why we use fundamental analysis?
Fundamental analysis is based on discounted cash flow method.
Yes, but you say technical analysis.
Technical analysis for the timing
And time.
and fundamental analysis for the target price, for the intrinsic value. Some people may differ from me. Some people may use technical analysis to decide the price. Okay. All right, so far so good? Okay, that's it about, about the review of valuation. Okay. Now let's talk about dividends. Do you remember what a dividend is? Can you remind me or remind us? What is a dividend? It is, well, what is the residual claim is the equity, right? And that claim is the dividend, right? Where does dividend come from? They come from net earnings. On the profit and loss statement, usually begins with revenues. The last item of the profit and loss statement is net income, right? And net income may be used for two purposes, which are to pay dividends and retain earnings. The dividend is a type of profit the shareholders will get for the capital they provided to the company, right? Let's see, I'm not quite sure if it is updated. If it doesn't work, we'll skip it. Can you try? I'm not sure if the deadline is over. Probably have to change it. Does it work?
Yes.
It works? Okay. I'll give you a minute to log in and then I'll do it myself. Probably you'll have to wait for me. A couple of minutes. Let me see. This is the first question you get? Yes? Yes? Okay. So when a company makes a profit, what decision does the company need to do? Whether or not to retain earnings and how much? Whether or not distribute earnings and how much? I'm listening. See. Whether or not borrow money and how much? And whether or not issue equity and how much? So when you make profit, what do you decide?
Pay or eating.
To pay dividends or not? How much will I pay per share? How much money do I want to distribute? Okay. Do I want to distribute earnings? Do I want to pay dividends? Distribution of earnings and dividends, legally speaking, they have different connotations. For the shareholder is the same, they receive money, right? But they in fact represent two different types of profit for the shareholder and different tax rates, okay? So you may hear, particularly in our country, when you look at a bank statement from an investment, there are two different types of earnings a shareholder gets: dividend and earnings distribution. Okay. Okay. Very good. So whether or not to retain earnings or to distribute earnings, and how much the company will retain or pay. Can you say something? Who decides if a company pays a dividend or not? Can you see the answers?
No, we need to.
It's another question.
I cannot see. I have to go back?
Yes. It says how many types of dividends may a company
Ah.
pay?
Okay. Sorry. I'm not type is definitely a company paid, but can you see the answers? I only see 1, 3, 2, 4. Well, say it out loud. How many types of dividends a company may pay? How many types of dividends do you know? Only one? And in what form does shareholder receive dividends? Cash?
Pardon me?
Purchase,
The purchase.
Chase? Yeah, that's another one.
speed,
Right?
real,
What was that, sorry? There's one more. Does anyone remember? Or no? In fact, the company has four types of dividends. They can pay a dividend in cash. They can pay dividend in the form of more stocks. They can pay dividend by giving you cash in exchange of the stock. And they can pay you with more shares by dividing the ones you already have. Okay? So that means not all types of dividend result in cash flowing to the bank account of the shareholder. Okay? What you receive is wealth. Sometimes that wealth, that profit takes the form of cash. Sometimes it doesn't. Okay? Okay. So who decides if a company pays a dividend or not? The board of directors. And who votes there?
The share.
Remember, we have the shareholders meeting
simple,
and the board of directors. This is the maximum authority, right? The company votes for the payment of the dividend at the board of directors. Many shareholders will be represented there, but the election, the votation is in the board of directors. Okay? I think that's it. Okay. You know Shell company?
Yes.
What do they do?
Gas. They extract and also.
They also have petroleum drilling, yes. So they are basically in the energy sector. Okay? Can anyone help me read this paragraph, please? Mauricio?
Subject to board approval, Shell aims to grow the dividends per share by around 4% every year. And the group will target total shareholders distributions of 30 to 40% of its cash flow from operations to shareholders. The group expects over time to return cash to shareholders throughout a combination of dividends and share buybacks.
A synonym for repurchase is buyback.
yes.
Yes,
Where do you get the information?
from their webpage.
Webpage of Shell?
Their webpage, yes. Every company, every public company should have a section in their webpage where they disclose all the news and all the important information about the company. They are. Pardon me?
For investors.
Yes. Yeah, that's why they are public. They have to disclose the information to the public, whether or not we are investors in the company or not. Okay, that's one of the requisites. So who approves the dividend? The board of directors. Okay, that's clear? What type of dividend is the company planning to pay? Cash
And repurchase.
and the purchase buyback. This is what we call the dividend policy of the company. It is a statement that tells the market what is the plan about the dividends. Because they are not telling us how many cents or how many dollars per share. They are not telling us when they are paying. They are giving the general idea of how they will manage the dividend payments. So this is a dividend policy. It is a statement of the company. Every company should have one. Maybe the statement is we don't have a dividend payment because many companies don't pay dividends. Okay, companies, particularly in the pharmaceutical sector, construction sector, they don't pay dividends. That's the standard. Okay, they need the cash. That's why they don't pay. All right. So this is a dividend policy statement. Yes.
Construction sector, don't pay.
Usually they don't pay cash dividends.
Because also pretty.
But they are not construction. Are they? They are leasing. They are in the leasing market, not in the construction. Right? Okay?
Yes.
So far, so good? Okay. This is a specific dividend payment. Okay? Great. Better, isn't it? LPC second quarter 2023 interim dividend. Do you know what interim is? Provisional, which means they have not finished the fiscal year. So they are paying dividends in advance as a provision to those results in the year. Okay? The board of Shell, which is the company, today, July 27 this year in London, announced an interim dividend in respect to the second quarter of this year of how much?
33 cents.
Yes, 33 cents of dollar per ordinary share. Okay?
When the
shareholders will be able to elect to receive their dividends in dollars, euros, or sterling pounds. Absent any valid election to the contrary, persons holding their ordinary shares through Euroclear Netherlands will receive their dividends in euros. So if you don't choose, they will give you euros. Okay? Absent any valid election to the contrary, shareholders, both holding a certificate and uncertificate from Clase members, any person holding their shares will receive their dividends in pounds sterling. So people in this exchange will receive in pounds, otherwise they will receive in euros. Or you may choose, you may elect to receive in dollars, but you have to tell them explicitly. They will give you a date, they will give you a channel so that you can let them know. Okay, if you do not respond, then depending on the exchange where you bought the shares, you will get euros or sterling pounds. Okay, all right. Dividend timetable for this interim dividend. Event and date. Announcement date, what is it? Which coincides with the press release. So the day in which they tell the market they intend to pay a dividend, that is the announcement date. Okay? Yes.
public companies may announce in their webpage or in stock market, or how they announce.
They have to announce it in their webpage. They have to announce it in the channels the stock exchange provides, and they have to announce it through the media.
Okay.
Newspapers, electronic media, all channels, all channels.
Have any specific date before payment or not?
What do you mean? I don't understand.
Tiene que ser unos días antes del pago.
Oh, yeah, it has to be before, yeah, because you announce it, you first announce it.
Pero, o sea, ¿tienen que ser días específicos o puede ser?
Not necessarily, but there are certain standards. So if you pay annual dividends in Mexico, you would usually pay around May, June, because it is after March, which is your. No, it's just like the fiscal year ends in December. The tax return is for moral people in March. So this month, at the end of March, you are delivering the tax return. So you usually announce after March. So April, May, June. It's just because of the timetable of all the reports that you have to send to the authorities, right? So if you pay quarterly, like REITs, then it's every 3 months. Some REITs choose to start paying in February, some others start in March, so it depends on the company. Yes.
If you wanna purchase a share throughout broker or something like that, how do you receive your?
Because there is a bank account reference in your investment account, so you will receive it in your bank account. Okay? So the board of directors meets, approves the dividend. Then they announce the dividend. And there are certain dates after the announcement. We have, in this case, ex-dividend date for ADS, and we have the ex-dividend date for ordinary shares. It is exactly the same date in this case. It doesn't have to be like that. What is an ADS? ADS stands for American. Anyone knows? Depository? Yes. So you may imagine from previous slide that the shares of this company, of Shell, are sold throughout the world, or in many exchanges, okay? So that means that they were issued in London, in England, as you can see from the city of the press release, but they are sold in Netherlands, they are sold outside in the US, in other countries. The shares, in fact, do not leave the country where they were issued. They stay in the country where the company issued the shares. The only way you can buy a share from a foreign company is through a tool, through a security that is called American Depository Receipt.
In the case of US, right?
Any foreign company. So for example, people who bought Gruma's shares in the New York Stock Exchange, being Gruma a Mexican company, they have to do it through ADRs as well. Okay, so it's for any foreign company. The American Depository Receipt is a receipt given by something that is called a correspondent bank.
In stock currency,
Pardon me?
in stock exchange currency.
The stock exchange does not have a currency, so I don't understand.
La compañía es foránea, es en la moneda del país.
Not necessarily. I can buy Apple shares here in Mexico in pesos. Right? They can buy FEMSA's shares in the States in dollars. So this is Shell. Okay, and let's assume these are some of their shares. They were issued in the UK, but they are sold in Netherlands, they are sold in the US, they are sold in Asia, wherever you think. Since these shares cannot leave the UK, Then a bank, which is the correspondent bank. Will issue ADRs. These ADRs are certificates that prove that you, and then the bank has clients, you as a client of the bank bought shares of Shell through this security. In fact, the security is the ADRs. The American Depositary Receipt is a certificate, and the certificate has American Depositary shares. So the underlying asset is a share of a foreign company, okay? Since you cannot buy the shares directly, these are the ordinary shares. Then you buy the ADR, which contains a number of shares. If I'm not wrong, in this case, there are two. Two shares, two ordinary shares constitute an ADS, an ADR, okay? If the share pays a dividend, then this ADS will receive the dividend and the correspondent bank will transfer the dividend to you. If the company pays sterling pounds, when you bought the shares, let's say here in US dollars, the pound will be converted into dollars so that you can get your dollars. Or if you choose to receive sterling pounds, that means you have an account in the UK so that you can receive the sterling pounds. Okay?
Teacher, it can be any bank.
They are special banks because they should be investment banks. So if it may be any bank that fulfills the requirements, in that sense, yes, it could be any. But usually they are large investment banks. Bank of America, USB, okay. Very quick. BBVA is one of them. Citigroup. Okay. Right. Okay.
Yes.
So that is an ADS. So that's the way foreign investors can buy the shares of a company outside the domestic market of the company. Okay. The ex-dividend date is the date, but it's a date, specific date, August 10th, in which you are not entitled to receive the dividend. So you may receive the dividend provided you are the holder of the share, you are the owner of the share before this date. Exactly on this date, the right to receive the dividend is nullified. That's the rule of the company. And any dividend, every dividend has an ex-dividend date. Why? Because shares can be bought and sold every day. So we have to state a cutoff date. So from this day, the people who have the shares this day will receive the dividend. Otherwise you won't, because it becomes very chaotic for the company. See? All right?
It's like August 10th, if I had the share, I'm the one receiving the dividend, and if I sell it in August 11th, I will still get the dividend of
No,
Shell?
you won't get the dividend as from August the 10th. So only people who were the owners of shares by August the 9th will receive dividends.
Great.
August the 10th is already ex-dividend, so without dividend. It is like the teams, right?
Yes.
The deadline is 11:59. By 11:59, the platform does not receive assignments. It's the same. By August the 10th, you will not receive the dividends. That is the ex-dividend date, that date, okay? So if you want to receive a dividend, you should be in the record of the company. You should be in the record of the company on the record date. The record date is a cutoff date for the company. So they make this cut and they make a list, a record of all the shareholders by that date. And those people will receive the dividend. So people who are on the records by August 11, they will receive the dividend. But in order to be in the record on August 11, you should have bought the share by August 9.
Even if I bought it in August 9,
Mhm.
I passed through the ex-dividend date and I passed through the record date, so I'm already in the records.
Yes.
If I sell the share, would I still get the dividends when they pay?
If you sell it as from August the 10th, so after August the 9th, you will receive the dividend. Yes.
Usually,
But what do you think? What do you think will happen? Let's say you sell the share to me, and I should know. That's the reason we should know. I should know that I won't receive the dividend. The dividend will be received by you. I should not pay a price that includes that dividend. Unless I am very ignorant, unless I am very careless, I will pay a price that is above market. So the market price will immediately recognize that Miguel Angel will receive the dividend and I won't. Therefore, new buyers like me should not pay that dividend. If I am a public company, the market price of my share will immediately represent that, immediately reflect it. If I am a private company, no one will tell me. You see?
When they announce it, probably the price of the share will go like very high in order for people to reach the ex-dividend date, right?
In theory, should happen the other way around. As from the moment the company announces the dividend, the market price of that share should decline. Because a portion of the value is already paid off. Remember what is one of the methods to estimate the price of a share? The price of a share of a company that does pay dividend, maybe the dividend discount model. If one of the future dividends is already assigned to someone, I should deduct it from this equation. So I should start by dividend 2. What will happen? What should happen theoretically to the price? The price should decline. What we do see, in fact, in reality, is that some days before companies with a long history of payment of dividends, they usually announce dividends on the same month or the same weeks. So the market already knows. So very close to the usual announcement date, if the financial results of the company previously have been good, then some days before the announcement, we will see that the price of the share increases and then stabilizes. So it is, in fact, before all this happens, before all these dates, we will see that for a company with good results, the price would increase and then would fall and stabilize. Yes.
So in a way, it has its normal price.
Mm-hmm.
And weeks before the announcement, it goes up.
If the results were good.
If the
right?
results
If
were
not.
And after the announcement, it starts slowly declining until it gets to the same way it was before.
Not necessarily, because companies are very clever. Usually, if a company declares a dividend, very close to that date, they will also give some press releases to tell us about future projects or future expectations about the company. So if the price may go down because of the payment of the dividend, then good news about the company would compensate. And we would not necessarily see that the level of the price is the same as before the announcement. It may be higher, but not necessarily because of the dividend. It is, the combination of many things going on at the same time. Okay? So they are clever. They announce, if they are going to announce anything that may hurt the price, very close to that announcement or together with that, they will come with another news that gives us the impression that the expectation for the company are good. So they will compensate the bad news with the good news, right? That's the job of the CFO. She has to be clever, right?
So, like, for a short period, or like not, it's not like a very good investment, but I think if you want to make short period investments, these are the moments where you need to like buy.
To be
Hold them on
be
and
very attentive of the monitor to look at the prices, yeah. If you want volatility, this is usually a very volatile time for the share price, yes, indeed. Mhm. Okay? Right, so far so good? Yes.
That means how many days are between exhibition date and record date?
Usually one. The CFA paper will tell you that it's 2 business days, the difference. Nowadays, many companies have only 1 working day of difference between the ex-dividend and the record date. That's something the company decides. So it's between 1 and 2 days. But we may see, extraordinarily companies with 4-day difference between the record and the ex-dividend date. They have a rule in the States. If the dividend represents a dividend yield of 25%, so if the cash dividend is 25% of the market price of the share, then the ex-dividend date will be 1 day after the payment. So it's completely out of sense, but they have this rule. Of course, it's very difficult that a company pays 25% dividend yield. It's too high. So it's usually 2%, 3%. A very high dividend here in our country is 8%, and that's very high. Okay, and that's for REITs. Companies which are not real estate investment trusts, they pay between 2 and 3%. Those that pay, because about 60% of the companies in our country pay dividends, and the other 40% does not pay. Okay, so those who pay dividends are between 2 and 3%. So it's not that you are going to get rich by getting dividends.
Teacher, those who pay dividends, it's every year,
They are not obliged.
but usually they do.
If they have paid before annually, they would stay with the year. But there are companies like IBM that pay every quarter. So they choose if they want to do it annually or quarterly or biannually or every now and then. For example, Banorte pays whenever they want. So many years they didn't pay, then they pay for 5 years, and then they stop, and things like that. So remember, it is not an obligation for the company. What happens is that if the company has been paying dividends annually for many years, if they stop, then the market will get very accepting about the future of the company, and the market will hurt the price. The price will go down very drastically. So they cannot afford that. So what the companies usually do is they establish a low dividend so that they are on the safe side so they can reach it. If they have extra money, if they have cash in excess, then they pay something that is called an extraordinary dividend. So imagine you expected to receive from your parents 5,000 pesos a month, and 1 month you receive 7,000. How do you feel? Fantastic, right? What if they told you you're going to receive 5,000 and then 1 month you don't receive it, and then the other is 4,500, and then the other is 5,100? So you don't know. Uncertainty hurts the price of shares. Uncertainty decreases the price of share. Why? Because we reflect uncertainty in the discount rate, in the return we expect. So if you are a risky company, I want 30% return. If you are a company that I know for sure you will pay me low dividend, but you will pay every year, okay? Then okay, I can manage 22. So you see, the riskier the company, the higher the interest rate. or the return we expect. And the higher the return, the lower the price. So price is no other thing but a reflection of how risky we believe the company is. Other things equal, of course. Okay? And the market has a lot of power on companies. Companies are scared about the market because the market influences a lot. Okay? Okay?
Yes.
Now, remember that this company had made shareholders choose the currency they wanted to receive the dividend. So they established that for that dividend, it was August the 25th, the closing of the currency of the election. Okay?
Teacher,
Yes?
how relevant are the dividends in their value at company? Because I see the dividends are very low compared with the capital gain we could get in the change of the price. So
It depends on the company. It depends on companies. Because for companies whose capital gain is not that large, then dividends are very relevant. So for stable companies, companies whose sales grow, but grow in a relatively low growth rate, then dividends are going to be relevant. For companies like infrastructure companies, whose profit comes from capital gains, dividends are irrelevant. Because what really matters for you to make profit on them is the capital gain. So whether they pay or not is irrelevant because you get 30% return on capital gains. So 2% is nothing. Right? So it really depends on the sector of the company. We call them, you remember the three-factor model?
Yes.
Yes. And do you remember the third factor?
The large.
And third factor, no, the second one?
Um,
The third factor was market, value and size, or size and value, right? So we have growth stocks and value stocks. For growth stocks, dividends are irrelevant. For value stocks, dividends are very relevant. So it depends on the type of company.
okay. So teacher, the company who pay dividends no pays the company who don't pay dividends, right?
No, it doesn't mean no. Companies that pay dividends, first of all, they have cash to distribute. And they can forecast the cash. So it's not that they are better, right? They have a different nature. So they are usually more predictable. And because they are more predictable in terms of cash flows, then they are able to pay dividends. They can risk to announce a dividend, if you know what I mean. Right? If, for example, I am Homex or Urbi, and I depend on the government of Mexico applying or spending money in social houses, I cannot afford to pay a dividend because I don't know if the government will spend money or not. I don't know if they are going to cut the social programs or not. I don't know if they will pay on time or not. I know they won't pay on time, usually, right? So you cannot afford to announce a dividend. It's just too risky. Okay, so it really depends on the nature of the operation of the company. Right? So Gruma, do you know Gruma? Do you remember Gruma? What do they sell? Basically, or mostly?
Tortilla flour.
Tortillas, right? Can they afford to pay a dividend? Yes. Bimbo, what do they sell?
Bread.
Can they afford to pay a dividend?
Yes.
Yes. Coca-Cola, what do they sell? Yes, so those type of companies, they can afford to announce and pay dividends, right? Because they have stable cash flows. They can count on money coming in, flowing into the company. But infrastructure companies, pharmaceutical companies, medical companies in general, I don't know. Banks? No. Some of them pay, but they are not as stable as the other three companies we mentioned, like Coca-Cola, Gruma, Bimbo. So it depends. And that's why we need to understand the companies we invest in, the sector they move in, their patterns, okay, so that we can understand how feasible the promise they are making is, because they are going to promise the whole world and the moon more than that, right? So we have to know, we have to have an idea if the promise is fundamental or not. Okay. And finally, yes.
These dates applies to all types of dividends.
Mhm, exactly. No matter what type of dividend the company pays, there must be an announcement date. There must be an ex-dividend date, a record date, and finally a payment date. That is the date in which you will receive the money or whatever type of dividend.
Which is for stock dividend is the payment date.
Pardon me? The what?
The payment date of stock dividend or the purchase.
For a stock dividend, yeah, this is the date in which you will receive more shares, yes. So imagine the company announces a stock dividend. So the company tells you, I won't give you cash, I will give you more shares. And then you think, well, I need cash. What can I do? I already have 1,000 shares. I'm going to receive probably 20 more. I can sell the 20 extra shares, right? So it is important for me the payment day, because on that day, I can sell the shares and I can receive the cash I want. So it is, even for a stock dividend, the payment date is important, right? All right?
Yes.
Okay. So this is a typical timeline of the dividend payment from. We have a declaration or announcement day. You see how Shell calls it announcement. It's also called declaration day. It is usually accompanied by a press release. And you will see the news and the date of that press release, the date of the article will be the declaration date. Usually the declaration date is, sometimes it's on the same day, but it is usually 1-2 business days after the approval of the board of directors. So we have the meeting and probably we announce it tomorrow. Okay, sometimes you announce it on the same day. Then you have the X date, which is the ex-dividend date. This is the date in which the right to receive the dividend ceases, okay? You don't have the right to receive dividend on this date. So for example, if March 15 was the ex-dividend date, then on March 15, people buying the shares on that date won't receive dividends. We have the record date, which is also known as the holder of record date. This is the cutoff date the company makes to make the list of the final names of shareholders who will receive dividends. That's why it is usually 2 business or 1 business day after the ex-dividend date. But because on the ex-dividend date, you don't have the right, then people in the record date will be people 2 business or 3 business days before the record date. Okay? Because you don't have the right to receive dividends on the X date, and the record date is usually 2 business days or 1 business day after the ex-dividend date, then people who have the right to receive dividend will be those holding the share 2 business days or 3 business days before the record date. Okay? And finally, a payment date, the date in which you will receive the type of dividend the company declared and announced. Approved, declared, and announced. So those are the 3 different steps, stages in the chronology of the dividend. It has to be approved by the board of directors, then it has to be declared in the board itself, and then announced. Okay? All right? All the days in which you may buy the share and are entitled to receive the dividends are called dividend dates. So let's say August 10 or 25th, 2022. The company share paid a dividend, a cash dividend last year. Okay. as from, and then they will have on August 10, right? What's the ex-dividend date this year, correct? So all this period of time is called the cum dividend date. Provided the company did not pay any other dividend in this year, right? So any of these days, if I buy the shares, if I bought the shares at any of these days, I have the right to receive the dividend. I bought it at cum dividend dates. Because on August the 10th, that was the ex-dividend date. And then according to Cheryl, the record date was August 11th. So that's why this is one business day after the ex-dividend date, and people owning shares by August the 9th will be on record on August 11th. And these are the people entitled to receive the dividend. 33 cents of dollar for every share they hold. And remember, shares are registered securities. All of them. So the authorities, the regulators know who the owner of every single share is. The company has to provide, is obligated to provide a list of the shareholders of the company, no matter how many shares you hold. Even if you had only one share, your name should be on the list and will be sent to the regulator. And the tax authorities will know you have a share, and they will know you receive a dividend. So they know you have to pay taxes.
How do you pay taxes on capital gains?
In the tax return every year for us as individuals, in la declaración anual, the tax return, you have, it is pre-charged already that you have investments. So the investment bank will give you a bank statement stating what is the actual profit you got, and that you should declare in the tax return. It would accumulate to the other income you have, and depending on the level of total income you have, you pay between 20 to 35% of taxes. So it depends on your total income. It's not dependent on the capital gain itself. It accumulates to the other income you receive. And we are obligated to do it because the bank won't do it for us.
There are no difference between capital gains and dividends.
Yeah, for the dividends, they withhold 10%. So they will hold, if you receive a dividend, they will hold 10% of the return, but still, that income in the tax return should be added to your annual income. And depending, again, once again, depending on the level, let's say you, I don't know, you have net earnings of 400,000 pesos, and you should pay 30% of that. How much is that? 120?
Yes.
Okay. Am I right? So 30% of the 400,000 pesos. So this is the income tax you should pay on that year. They will deduct all the taxes that will be withheld. So your employer withheld a portion of the tax, the brokerage house withhold another part. So maybe in your payroll, you were withheld 105,000 pesos. So you have to pay 15,000 more. Maybe in your payroll, you were withheld 135,000, which means you will get a return of 15,000. So SAT will give you back 15,000. That's what we should do every year. Okay.
So dividends already have paid
When
tax.
you are paid the dividends, the brokerage house withhold 10%. This 10% is part of this withheld tax.
But why 10%?
That's in the law.
Like, although it seems a lot.
But it's 10% of the dividend you got. So if you got 2 pesos, it would be 10% of the 2 pesos. It's not 10% of the value of the share. Okay? All right? No, because dividends are only 2%.
Our dividends come from net earnings, and net
Yes.
earnings also pay tax.
Oh, yeah, but remember, the company is a person and the shareholder is another person, right? So this person pays corporate tax and this person pays individual tax. If I am a shareholder of this company, yes, I am paying twice, yes. My company pays taxes, and then when I receive the dividend, I pay taxes one more, yes. It is double, yes. Make the congressmen do not understand this. So it's 2 people, they are paying separately. You are not duplicating the tax. Yes, you are. No, we are not. Okay. They should go back to primary school and we should teach them maths one more. Okay, so this is the discussion. This has been the discussion all our life. So a company pays taxes as a legal person, and then the shareholder will pay taxes when they receive dividends and earnings distribution once more. And if the shareholder is an employee of the company, he will or she will pay taxes once more. Yes. Every peso you receive pays taxes, no matter how many times it has paid before, unfortunately. Okay? So far, so good?
Yes.
All right.
Teacher, in the US also having this.
It does happen, but but they have different tax rates for when you receive a dividend or when it is or for the company, they have different tax rates. So yeah, you pay twice. Yes, you pay twice once more, but probably you pay less because of the rate. Yeah, but they do. What they don't have is if you make income in another country, then you don't pay taxes in the other country, bring it to mine, and we'll accumulate it in your domestic income and you'll pay here. So that's the reason of the international treaties for that. So for example, foreign people who invest in Mexico or who have companies in Mexico, usually they don't pay taxes here, they pay taxes there because it is more convenient, it is easier, it is less troublesome than paying here.
But
So we lose money.
Not convenient for.
Yeah, exactly. If we made the tax system easier for everyone, then we as a country would receive more income. It's like, right? Yeah, we have these treaties and foreign people pay taxes in their countries because it's less troublesome. They don't understand our laws. We do not understand our laws. So they don't understand either.
And we the only thing that get from that, it's like the investment.
Yes. Like the creation of job jobs,
So
which is not bad, right? I mean, but taxes, which represent 30% for corporations. So 30% of the value added created in our country for those foreign companies goes out to Mexico. They don't pay it. If they are clever enough, if they have good consultants, fiscal consultants, they would pay outside Mexico. And they would pay less. Yeah. Okay. So California, August 18 this year. Anyone who would like to help me with this paragraph this time? Okay, Milagel, please.
Wall Street, California, August 18, 2023. Businessman Bacon Corp. Or the company. The parent company of United Business Bank today announced that its board of directors, the board, declared a quarterly cash dividend of 10 cents per share on the company's outstanding common stock. The cash dividend will be payable on October 13, 2023 to shareholders of record as of the close of business on September 15, 2023.
What type of dividend is the company announcing? Cash dividend. Mhm. And once more, who approved this dividend? Okay, the board of directors. So if this is a question in an exam, who approves the dividend in a company? The board of directors. Okay. So you see here, we have a company paying quarterly dividends, not annual, quarterly. Okay? And once more, what is the payment date for this dividend? What is the payment date? You have a question?
Yes, like I understand dividends are too low, so maybe for us mortals, it's not like significant, but for multi-million companies or multi-million millionaires, the dividends are significant.
Imagine you have 10 million shares of this company. How much would you get as a dividend? If someone had 10 million shares of this company, how much would he or she get as a dividend? 1 million? Yes? Per quarter? Not bad. Not bad, right? So yes, indeed, it depends on the volume. It depends on volume. If I only have 20 shares, 50 shares, I would deem the dividend to be absolutely irrelevant, right? But the volume makes a difference. The volume makes a difference. Say at some point in your life, you have saved 1.5 million pesos. And suppose, pardon me?
Some point.
At some point in your life, yes. Okay. And say you receive 3.5% of dividends on this amount of money. How much would you get?
$52,500.
15,000?
52.
52,000? 52,500 pesos. Okay. So let's say at some point of your life, you have 3 times this. You can get a very nice holiday every year. Can you?
Very nice vacation.
So you know how to make these numbers. You know how to do this. So in about 1 year time, you will be finishing school, right? So by the end, by the end of 2024, let's say, right, you will be finishing school. How much money do you need to save every month for the next 10 years so that you can have an X amount of money and get, but this is dividend. What if by then, so in the past 10 years, if I'm not wrong, CETES have paid about 5 or 6% per year in the past 10 years, if I'm not wrong. Okay? And 10-year bonds about between 6 and 7. So this is just dividend, but it's not all there is outside. So what if by this date you have certain amount of money, have these investments, and then by the time you retire, right? How much money will you have? You don't care about Afores. So what? They won't work. So okay. You don't have to depend on them. You know how to make these numbers already. Make the numbers. Maybe it's not that difficult. Maybe it's not that difficult.
The money is a difficult part.
But you will get, that's the point. You will get money at this point. You will.
Maybe.
No, you will. And I know you will get a lot of money. I know. I can tell from the experience of previous generations. I can tell. You will make good money, all of you. Just make the numbers. Be disciplined. If you were not disciplined at school, be disciplined after school. It's for your own benefit, no one else's. But if you don't plan this, and then by year 240, you start thinking of your retirement, of course you will have to retire by year 2060. Yes. If you don't plan, of course. But you know how to plan. You have the quantitative skills. You have the knowledge. You have the age. What are you waiting for? What are you waiting for? If I had known this by your age, I could not be here. So, follow my advice. Look in my mirror. If I had someone who told me, if my teachers had told me this, I had to discover it by myself. Okay, it's not late. It's not late for me, but it could be a lot better for me. Right? So you are just in the right age, just in the right moment to make intelligent and good decisions for yourself. You have the skills and you have what it takes. You have it. Use it. Use it. For you, for your families, for the society. Use it. Don't waste it. Don't waste it. It's so sad to watch people wasting their talents. Okay. If you didn't know you are talented, you are very, very talented. You are, all of you. Okay. And we do our best to give you the technical skills to exploit your talent in your benefit and the benefit of the society. One better society. You are our future. My son's future depends on you. I count on you. Okay? So far, so good?
Yes.
Okay, we'll continue on Friday. I'm doing my best to bring the results of your exams on Friday, but if not Friday, for sure on Monday. Okay? Yeah, okay, thank you very much. I will see you here on Friday, okay?
Tengo que pagar eso. Thank you, teacher. Ya remontaron los equipos. Así se empieza.
Yes. Thank you, teacher.
Bye.
Sí. Como yo era la última que metía, y luego esta mañana con el
Sí. Sí, el examen más como está el examen pues más estilo de empresas. Ya sabes aquí en el posgrado buscar una certificación de la MIP o algo.
Las certificaciones de la MIP son más, todas las que ellos tienen, son más como de mercado financiero, no tanto de finanzas corporativas.
Para manejar la bolsa.
Sí, o sea, para que entiendas, por ejemplo, los diferentes instrumentos que hay, cómo operan, un poco de la normativa. Entonces, va más enfocado a los instrumentos financieros que hay, la operación de
Pero eso, porque
ayuda, sí.
lo que está investigando es que es como una certificación que te da la central de bolsa. como para poder operar como una licencia para poder operar.
Lo que pasa es que la gran mayoría de las personas que trabajan pues, en el sector financiero, sobre todo la parte bancaria o
sea, no
seguros, necesitan, si van a tener contacto con el cliente último, el inversionista, necesitan tener esa certificación.
Pero tienes que
Entonces, sirve, sí,
y está
bueno, sí,
no hay ningún
está limitado a mercados financieros y la vas a usar, sí, si vas a trabajar en alguna de esas ramas, básicamente,
Y yo pues creo que la mejor
le tengas que explicar algo.
O sea, pero sí se puede extrapolar de hacer esa certificación y no necesariamente estar trabajando en la bolsa.
Ah, no, pues cualquier persona
De
puede
cualquier
tomar,
empresa,
cualquier
de
persona puede tomar la
corporativas.
certificación. ¿Sí?
También está viendo que en algunas, bueno, supongo, no sé en cuántas facultades, pero como yo soy de Chihuahua, que conozco gente que está estudiando finanzas allá.
Ajá.
Al final a los semestres finales, como octavo, noveno, les piden hacer la certificación como el primer nivel o algo así.
Ah, ok, muy bien.
Pero por eso tenía la duda.
El primer nivel es como para vendedor. Si lo va a hacer, el 3.
El 3 es el más técnico, ¿no?
Es que es se llama asesor en estrategias de inversión. Entonces, pues se ve todo el mercado financiero. Ahora sí, las diferentes áreas del mercado financiero.
¿Y como hasta qué punto puede tener uno? Bueno, ya estoy preparado como para hacer el nivel 3.
Mire, lo que viene siendo matemáticas financieras, economía, derivados, si toman la materia de derivados, yo no te voy a decir que también la parte de derivados. Con
Esa es optativa aquí, ¿no?
Exactamente, es escuela es optativa, pero si la tomas, como allá es un tema obligatorio, todas esas áreas ya la tienen. Lo único que no, yo creo que lo que nosotros no cubrimos es la parte de las leyes. Hay una parte del examen que tiene que ver con que le hacen tomar un curso de ética en los negocios, en ética bursátil, pero ellos le dan material, luego es como autogestión, ¿sí? Y la parte de las leyes es probablemente la parte que más cojeamos porque no, la verdad es que no la vemos. Entonces, pero si se agarra la ley del mercado de valores,
Pues creo que ellos dan como ciertas guías, ¿no? Como de estudio, según yo. O bueno.
es que creo que si toma el curso le dan las guías, pero si no toma el curso antes del examen.
Es solo el examen y ya.
Sí, porque según yo, la guía que viene, si no toma uno el curso, son como que puede servir, vienen los puntos, o sea, viene lo que hay que saber, ¿no? O sea, puede servir.
Pues como aquí en la universidad, me acuerdo cuando.
Aquí lo dábamos en la escuela, no sé si todavía.
Daban como unos documentos que eran los temas que se estaban.
Es que aquí daban los cursos, entonces por eso se daban los cursos y entonces daban el material. El curso incluía pues, como un booklet, ¿no?
Ajá, sí.
¿No? A lo mejor por ahí todavía están, no sé si están en la biblioteca.
Y el nivel 3 es el más alto, ¿verdad?
Es el más alto que ellos tienen, sí, pero si se va a tomar el tiempo, si le va a meter dinero en su bolsa, yo les sugiero que se vaya a 3, no tiene caso los otros dos. Los otros dos de alguna manera están contenidos en esto, pero son mucho más restrictivos en el alcance que tiene, en el alcance que usted puede tener de oportunidades.
Y con respecto a esa certificación y un posgrado, ¿qué sería?
Lo que pasa es que el posgrado es mucho más amplio que la certificación, y mucho más profundo que la certificación. Entonces, la certificación le va a servir aquí en México, la mí le va a servir aquí en México, pero fuera de México no le va a servir. Entonces, el posgrado le va a servir donde sea. Si puede tomar las dos cosas, hágalo.
Es lo mejor, ¿no?
Pero digamos que pensando en el largo plazo, yo pensaría que el posgrado tiene más potencial de tener un impacto en su vida profesional, porque la certificación después del posgrado la como quiera la puede tomar. En cualquier punto de su vida lo puede tomar. La práctica lo va a estar nutriendo del contenido que tiene la certificación y le va a ayudar a que sea mucho más fácil en el sentido de que va a tener que estudiar mucho más.
Sí, ya lo voy a haber hecho.
Usted va a estar aprendiendo en el trabajo lo que a otra persona le tomaría un libro. Entonces, sí, yo creo que así con visión de largo plazo sería el posgrado, con visión de más corto plazo la certificación, pero cuando esa nomás dura 3 años, entonces la tiene que estar renovada. Pues no, pues no. No tiene explicación.
Gracias, doctor.
Nada.
Doctora, Emanuel y yo somos representantes desde aquí. No sé si la administración ya le comentó. Bueno, en un principio su examen de segundo parcial era el 20 de octubre.
Sí,
Pero no sé si ya le comentaron que ese día va a haber una conferencia de capital humano o algo así.
está programado el congreso. Sí.
Entonces, pues, lo que pasa es que la administración nos propuso una fecha,
Ajá.
pero lo que pasa es que ya ve como que está como que todo vuelto porque hay exámenes de
¿Y
sí.
qué fecha les
El
propusieron?
sábado 28 y presentaríamos el 27. Pero pues, no.
Entonces,
Y nomás les propusieron esa fecha, no les dieron lo más alternativo.
no, nada más no, pero lo que pasa es que nos están contando cómo ese día no, aquí no sé qué, porque son aquí, bueno, total, sí son mis papás ahí. Entonces nosotros, junto con nosotros, que bueno, pues a lo mejor sí presentamos el segundo parcial de corpo el 30, el lunes
Serían
30.
fechas extracurriculares de exámenes, pero, o sea, serían.
Porque el 20 es parcial, ¿verdad?
Sí,
O sea, el 20 de octubre era parcial.
Sí,
Ok.
pero
¿Y si lo cambiamos al 30?
ajá,
¿Qué cae?
lunes.
Pues mira, problema.
Lo único que les preocupa a los compañeros es que como tenemos exámenes entre el 20 y el 30, que se van a alargar el contenido para el parcial de.
No, le podemos decir lo que íbamos a ver de contenido para el día 20, eso mismo se presenta para el 30. Que básicamente va a ser el costo de capital y dividendos. O sea, sí.
Sí, bueno, entonces creo que esa sería la fecha. Igual vamos a platicar con mis compañeros. Bueno, varios estaban de acuerdo de que sí.
Esa fecha sí se las acomodaba.
Sí.
Ok.
Entonces, pues, sería nada más hablar con la administración y comentarle que ya hablamos con ustedes, con nuestros compañeros y eso.
Sí, está bien. No pasa nada.
Muchas gracias. Pero está bien raro porque ahora la tasa de bondía está más alta que la de CETES y a veces se va como que cambiando.
Lo que pasa es que se supone que la tasa de bondía es un promedio ponderado de instrumentos de muchos plazos.
Ajá.
Entonces, cuando la de 7 baja y los otros se mantienen alta, bondía se queda alta. De hecho no es extraño. No tengo el registro porque no lo hago, pero sí es frecuente que bondía esté más alto que el 7 o casi a la par.
No, es que yo me metí en él cuando le pregunté cómo hacer la cuenta.
Ajá.
Y pues sí me he dado cuenta como que a veces está CETES más alto, pero bondía, y ya mejor todo lo dejé en bondía.
Es que luego va a ver que el bondía está para arriba, uno se va a emocionar, lo va a dejar ahí en el bondía, y luego en la semana el 7 lo va a superar. Sí. Entonces uno va a decir, ay, lo hubiera metido el 7, y así se la pasan esos dos instrumentos. Entonces lo mejor es, ¿cuál es mi estrategia? ¿Qué es lo que yo busco? Me enfoco en eso, porque si uno se deja influir por todos estos ruidos de corto plazo, pues uno se estresa y se trama. Sí, o sea, porque es muy difícil adivinar lo que va a suceder. Y hay jugadores allá afuera que son tan grandes que efectivamente pueden literalmente ellos influir en las tasas, aun y cuando eso no tenga nada que ver con las condiciones generales del mercado. Entonces es algo muy específico. Y pues si uno se clava en eso, sí puede ser como muy frustrado. Y entonces uno empieza a tomar decisiones tratando de ganarle a quién sabe quién, en lugar de tener una estrategia, en lugar de tener un sistema en la estrategia, no sé si me explico. Sí. O sea, hay veces que la gente se pone muy nerviosa, entonces tiene ya como una estrategia definida y se empieza a alejar de esa estrategia por tratar de ganarle a algunos indicadores o tratar de hacerle caso a algo que salió, en lugar de adherirte a tu estrategia que ya tenía un plan, que tenía una razón de ser, que tenía una meta. Entonces, cuando uno se aleja de la estrategia, cualquier cosa puede suceder, incluyendo que los resultados sean nefastos. Entonces, yo, en mi experiencia, lo que yo he visto, lo que yo he vivido es, hay que tener una estrategia, hay que tener un plan, hay que tener un objetivo y una meta que esté acorde a mis expectativas, ¿no? A lo que yo quiero. Porque si voy a dejar que todos me influyan, hay tanta información allá afuera, tantos puntos de vista, que entonces uno termina haciendo una mezcolanza que ya no se puede ni siquiera llamar estrategia y que quién sabe qué va a resultar. Y eso es mucho más dañino que a lo mejor mi estrategia va a perder y luego se va a recuperar, ¿no?
Sí, pues yo lo veo.
Porque la gente se pone nerviosa y empieza algo a caer y empieza a vender. Y luego, pues se van a tardar más en tiempo en recuperar que si se hubieran quedado.
Sí.
Entonces, eso es lo que yo he visto. Hay que tener una estrategia, tener muy claro qué es lo que la estrategia va a poder ofrecer, qué es lo que va a poder alcanzar, estar, pues, convencidos de que esa es. Si no estoy convencido de la estrategia, pues ahí sí hay que buscar otra. Evaluar varios. Pero sí, no cambiar nada más porque esas cosas van a suceder, y van a suceder todos los días y van a suceder siempre, desafortunadamente. Pero es parte de la práctica.
No, pues yo lo pensaba dejar así ya